Here's 4 reasons mortgage rates are up, even though the Fed cut the federal fund rate. Number one, there's high demand for the stock market. Number two, 10-year treasury yields are still relatively high because of low demand. Number three, banks sell mortgage-backed securities, and in order to make those attractive to investors, they have to keep rates relatively high. And number four, the Fed rate isn't actually what banks lend at. It's actually the rate at which banks borrow money from one another or from the Fed directly. The other thing to keep in mind is that the Fed cut was already priced into the market. And so as a result, you didn't see rates go down. They actually went up slightly, again, because investors knew and the banks who set the pricing for mortgages knew that the Fed was likely not to be aggressive on cutting now and in the future, as Jerome Powell stated. So I think we're in for a very strong end of the year in this fourth quarter, despite rates not coming down as fast as we would have hoped. But I do believe that next year, the economy is set for a rebound. We are going to see more people buying treasury, 10-year treasury, especially as the stock market cools down. Right now, we have a lot of folks with money in the market. The stock market is booming due to AI, and that's really driving a lot of the capital that normally would be in bonds, which would drive down the bond yields and then drive down mortgage rates. That money's in the stock market right now. So let's watch this as the year unfolds and as the year comes to an end. And like I said, I think we'll be due for some good news when it comes to mortgage rates in the year to come. Stay tuned for more.